back from Arizona to negative every single day since I've been back. What's going on, John?
This is going to be a corn-heavy episode. We're going to talk about what to do with old crop and what to do with new crop corn and the planting that needs to happen. I didn't want to do the whole episode, but we need to talk about it. We're in that time zone. I think we just have a couple weeks to get a plan together. Anyways, we're going to do old crop, new crop, corn, and almost that's going to be it. Maybe gold and silver a little bit.
Love it.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I missed last week because I had to do some golfing in Arizona, but
Brett was here.
Hey, that's great. It was nice to take a break, but it was nice to hear somebody with more knowledge than me.
Yeah, I hadn't had Brett in the office in a while. Markets are quieter, of course, especially for stuff that he does. But, he's still sticking and moving. But he definitely is always working on the side with the banker and getting that, structured. First, he went over, defining the costs and really getting to know your costs, like the actual cost, not what you want to tell yourself or the banker. And then from there, working with the banker, and then from there, working on the hedge account, and then tying all three together. And it's something I've experienced with him, and he knows what he's doing when he's talking to the banker. And that's again, we talk about this a lot in the podcast. I don't believe a lot of people do that. I think a lot of people have an operating note, and then they simply try to use a portion of their operating note to profit in the markets. I shouldn't say that it's everybody, but I think that's very common. I think or they try to fund margin calls out of their own pocket and don't actually have a plan. I think that's very common. But what we were talking about is the getting everybody on the same page. You might have margin calls, and the banker is going to know that you're getting in strategies that would provide. But it's that transparency. I think that's what you're looking for in that relationship. So we went over that, and it was a good, refreshing, different conversation. Although we've touched on it many times in the past, having someone that actually that's their job and that's what they do, and getting a little insight there.
Speaking of margin calls, is there anyone silver or gold?
Another gap up. So all these years of trading, I've always had silver or gold guys, and this is what they were talking about so far. That eventually they're not going to like the U.S. debt, they're not going to like our currency, they're not going to like the world debt, and gold and silver are the only thing. So you're getting a gap up. I think we hit 117 in silver today. Now we're at 110. You're thinking, oh, maybe that's the top. It's still up like $7. Just because it's $7 off the high doesn't mean it's the top. There's really no good way to get in this market. You're going to pay a lot of money in options. You're going to pay a serious amount in margin for what I think $50,000 last I checked for silver contract. Then you do a mini, which is going to be a fifth of the size. It'll be a fifth of that margin. A very dangerous market with no limits. So on the physical side, what's nice about futures is there is guys long futures, and when they want to get out, they're going to get above spot price. If you try to get out of your silver, drove it to Treasure Island because we're near Fargo, and try to sell, I haven't called them. I don't know what they're offering, but I'm pretty sure it's not spot.
I'm also pretty sure it's Mindex now, but
is it okay?
Yeah.
So the whole thing's changed. I did not. It's been a while since I've been up there.
Yeah, I think Treasure Island's closed. Mindex, and honestly, I think I'd sell some now.
Did they take over?
I know. I think it's just a different.
Just bottom out and change the name.
Not that it matters.
Not that it matters, but you're not going to get spot, and that's why futures in this situation is much easier. With the snap of your fingers, you're simply out at or above spot price because it's futures, a little bit above spot. Where if you have physical stuff, it's harder to sell it in one big wad, especially for anywhere near the spot price. Last I heard, they're anywhere from 10 to 20 back on spot. I don't know.
Take 90 for a couple ounces.
Yeah. and guys are so. But what is going on there, and how is it going to affect the markets, which will segue into we need to talk about corn. I mean, this we're not going to go over the fundamentals and this. We're going to talk about what we need to do here as decision making for hedging. But it does tie into silver because and you'll see later on where it does tie into into silver. And a lot of guys are, because silver and gold's going up, now are grains next. And I think you watch the oil market. I think that's your answer. If the oil starts moving and this looks like a wider kind of inflationary deal off a lower dollar, whatever's happening, then at that point, yes, grains could follow. Without oil, I'm not in that camp. Whether the funds see grains is cheap and invest, they might. But oil, I think, is the driver of grains when it comes to inflation. Clearly, it's not gold and silver so far. I mean, it's not moved up with it. So I think you want to keep your eye on oil, and that's your indication. Now, if your marketing plan is because gold and silver are going higher, grains have to go higher, I'm going to do nothing. Never say never. I wish you luck with that, but there hasn't ever been a high correlation to that. But you never know with this. So back to corn. Are you ready to talk about corn? Even though this is going to be a more in-depth discussion on exactly what we're looking at for hedging this year.
I'm excited to learn. Let's go.
Well, you are going to learn. No, the choices aren't great, but we'll lay them out there.
Okay.
So the guys that are subscribed to the Insider will see the actual sheet on this. I'm working on it, and I'll be working this afternoon on it. And basically what it's going to do is lay out what I think are three choices here. The first choice, which is going to be the most popular one by far, and this is for December 26th and old crop, is let's just see what happens in the markets. And then if it goes up, I'm going to try to market it, which is what 95% of the people do.
Sounds good.
And it doesn't work that good. But every once in a while, if you do that, you do get the highs, and you already market real well.
Recently, it has, let's just be clear, it has kind of worked.
Well, everything's hand to mouth. When you're at these low prices like this, it's just hand to mouth. The end users they'll bid it up when they need it, and then they'll back that bid off. And that's why you'll see basis go up and down at these low. You'll see guys saying after the sell-off, after the report, basis actually went up. It should go up because we're at a low price. And in order to get that grain out of your hands, you have to bid up the cash price. Otherwise, guys aren't going to sell. And back to the March-May spread, which we've been talking about, that's showing negative 7 3/4. It might have closed at -8. What that's showing is we have great demand and not enough farmers selling. So could we rally from here? Absolutely. And we've been talking about the spread. Irregardless of that report, could we rally? Yes, because there's not enough in the pipeline.
It actually closed at 7.5.
7.5. So there is tremendous demand, record demand on ethanol, demand on the exports, and there's no reason for this to go down. Yes, it was a very bearish report, but there's not enough in the pipeline, and that's that simple. Could funds sell it off? Absolutely. And it would make probably basis even stronger, make it harder to get that. Now, the problem we're going to have, and this is why the sheet's going out, and this is why it's important, is we're going to start running out of time. Guys are going to have to sell, you're going to have to raise capital. You're going to have to fund the next crop. So they know it's out there. They don't want to pay, but they'll pay hand to mouth, and you'll get better. So you're going to get selling eventually. Watch that March, May. And then at that point, you need to get a lot more aggressive. While it's not, needed to be aggressive, while we're in this zone right here, we can talk about it in the planning, and that's where we're going to go right now. So do nothing. That's what a lot of people are going to do. Just wait and see what the price does. Maybe have time frames like I got to get rid of this by May, or I need to raise money by March. Whatever. It's going to be different for every farm. That could work for you. It might not work. In the old crop, I don't think you have a lot of choice there. I think that you're going to have to do that no matter what, because it's too far along now to protect, too low to protect, and not high enough to, be real profitable. So you're probably looking for spots like everybody else. Where are guys going to sell? 15 cents up from here. Where's your spot? I mean, where do you think guys are going to start unloading this old crop corn?
I think if we got anywhere back near that 450 in the March, if for sure 445-ish, I think. I'd love to see it get back to where it was right before the report. I do think it's possible.
Yeah, and that often happens,
I think it's
honestly.
Possible it's going to get there.
That happens. Why? It was a bearish report, but not bearish short term because of what we were just talking about. But longer term, it's very bearish. You need to start planning for 26. So you kind of see where I'm going with this. Like the front, it's not too late. Like you definitely want to try to market better there, but there's no magic combination of puts and calls and all the stuff that's going to make it really good. Last year, what worked really good, what Brett did actually, was he sold July 480 calls And they turned, no, it was actually 520 calls, turned around and bought 480 puts. It almost paid for the hedge. So he sold 520s, bought 480 Julys. It worked really good. So they profited from 480 on down. That's not here this year. You know what I mean? So there, for old crop, there's just not a lot you can do. It's not a high price. It's not a low price. They need stuff in the pipeline, wait for a rally. But what you can do with your orders is get away from those round numbers. So you think this has got a shot to go up to, what are we at, 426.5, 28.5? You think this shot's got to go up to 445? Have your order at 442. Be ahead because everybody has it to sell. Don't be the round number guy. Don't be the level everybody wants guy. Take a few cents less than that, and you're going to be a lot better off with your orders.
And if it goes to 448, you can add another.
Yeah. I mean, you want it to go higher because you're probably not going to sell 100% at a time. But be realistic with your numbers. So what's my number? I'm at 435 is very realistic for March to be able to get up to. Futures, which puts us pretty close to a $4 cash price and makes a lot of sense. A lot of guys would sell it there. So trying to figure what you're basically trying to figure out is when your neighbor is going to flinch, and that's as high as corn's going to get unless gold and silver and everything run away and go up. So that's old crop. We're looking for spots to sell realistically, 10 to 15 cents from here, and you want to be before everybody else. Now you can, after you make those sales, you can turn around and look at September calls. They're very cheap now. So if you want to re-own it with some upside, you can choose 470s or 15 cents. That gets you all the way through summer. That's not bad.
That's a pretty good price.
It is. And then September $5 calls are 9 cents. Probably going to be able to get those for 7-8 cents. So if you sell your old crop corn, the one that's in the bin right now, and decide, hey, I don't want to let it go, but I know what's going on here, but I kind of want to re-own it, but I don't want to spend a lot of money re-owning it. There you have very cheap September calls. That gets you through the third week in August. That doesn't get you through the grain reports in the fall. But we're not going to spend 25 cents on a bear market for calls. So just watch those September options. They're getting cheap. I'm not recommending you run out there and buy them, but I'm just saying if you do sell your corn and you want to re-own the old crop, September options are very affordable. On to new crop. Well, this is where it gets a lot more important. So I think we're at a crossroads here. And the crossroads is you can kind of see trouble coming. We have a lot of corn left over. As a matter of fact, probably the most ever for this time of year. And nobody wants to plant beans. Well, I shouldn't say nobody. You talk to guys out east, very different story than Midwest to West. The numbers don't work great for beans. It's leaning like corn acres. I mean, what are you hearing? I'm hearing 96 million acres corn. I'm hearing it from my producers that it's going to be corn. What are you hearing?
I am only hearing tears right now. We haven't got into those discussions.
Just crying so far.
Yeah.
Yeah.
Sorry.
Yeah. No. You have to get that. You have to get that emotional first before you can plan. So that's right. Good that they are crying. No, it is. It's a bad situation. But so do you grab that 455 or let's say 460? It's not there, but 455, 460. Do you just grab that and punt? Is that what you're doing? I've been looking at,
in the discussions that we've had, that the March 27 is at 467 today.
Yeah, with carry.
Yeah, that one's interesting to me. I don't, it's not like, oh, here's a huge profit, but so I'd be looking at March over December.
Do you run out and take that 467 with carry and deliver in March? With it like a hedge-to-arrives?
It depends on how you do it. I would not just go short futures there.
With the hedge-to-arrive, basically your short futures like you would be here, but it's the elevator takes care of the margins and all that good stuff, and then you're contracted to bring it in for that price. So that's one idea. It's like I need to punt this year, make sure I'm gonna make some money. I'm going to sell it, sell March hedge-to-arrives. We're at an area, and maybe I can add some value by selling a call later on.
It also depends on what percentage you're doing. Like, do I like that price? No. Is it okay? Yes. What percentage of what I'm going to produce makes sense to do that?
Yes.
And then how can we add value to that, as you guys discussed last week, is the way that I'm talking through things.
Yeah, so are you going to take that 467 or 460, say, with a good fill, with 5 cent rally new crop? Are you going to take that price and then try to build a better price? Are you going to take that price? Or, and here's where we're going, a different route, you're going to do nothing and wait and see what everything holds. Is gold and silver going to pull up grains? Are we going to have hot and dry? Basically a more traditional. See what gets planted and then make your decisions from there. And I feel like you're going to have to make that decision soon. It's not tomorrow or the next day, but I'm just saying, are you going to take this price that's available that isn't actually that bad? It's not been above 480, I don't think, for the last 2 years for new crop. So we're within a sense of where it's been for the last 2 years for new crop only, going into summer. So, or do you just go for it this year? And really, I'm not going to tell a guy what to do.
What if I think it's going to 10?
Well, then that's easy. You just load the boat with $9 calls, and then you're going to make $5,000 per call once it gets to 10, which is very likely. That's likely to happen this summer. No, I'm just kidding.
I mean, as soon as it gets to 7, I feel like it's going to get to 10. So I wouldn't. I wouldn't hedge there either.
History's on your side with that.
Right.
Once it gets to 7, it's automatic 10.
Yeah.
Or it's 840 is the all-time high, but. So it's not like this emergency because these aren't great prices, but you're really deciding whether you think this thing has upside or not. And I feel like this is a little different than any other year because of people souring on soybeans and the outlook being so pathetic for soybeans. Again, we have 81 million acres, and apparently that's too much, even with decent demand.
Right,
it's still too much. So are you going to take your chance with corn and just go for it? I feel like that's the path of least resistance. That's what most guys are going to do. Is it worth planting something else? Here's what I like. Here's what I think that a guy should consider some bushels on is marketing that price. And then one of two things, trying to build a better price with selling call eventually when the coast is clear, meaning the weather is not a threat anymore. If you get that chance, you might not, you might. And then try to get to like 480, try to get 30 cents a premium somehow and get that up to 485, and then you're all right. Or do you sell that and then let's say corn slowly drops to 435, and then it would be 419, for September before plantings. Do you at that point buy a cheap September call and reopen that upside? 470s would be 10 cents probably at that point. So my point on all this is not to have the answers, is that you are getting to a crossroads here where the snow will start to melt, even though it doesn't feel like it's possible right now. And then all of a sudden you're going to need to raise capital. At the same time, you're going to be planting another large crop. So you want to be ahead of the crowd. And again, this is right before things went downhill last year, mid-February. So I feel like the same choice is going to get made, because we have very similar fundamentals, meaning once this pipeline gets full again, it's going to be hard to rally without weather. So what could here's my list. We'll go through your list really quick. What could make corn rally this year?
My list is real short, just to give you a heads up. Go through your list.
I'm going to get imaginative because that's what I think people like, and that's what sells online. You want to tell everybody that it's going to go up.
I love it.
So gold and silver and out of control inflation.
Yep.
This might be looking like the cheapest price ever when corn's $10 and silver is $2,500 this summer, and you can't believe that you sold $4.50 corn. So either you think gold and silver and inflation is going to bring it, or you think there's going to be a weather issue. It's most likely not going to be policy anymore, as they kind of just passed on the ethanol stuff, but never say never there. It does change quick there. So are you going to do something right now, or just see what the weather does? Or rampant inflation, so those are my two: weather or out of control inflation bringing us to a higher price. So what's yours? So I basically got two things.
I thought you had this full. I said my list was short.
I tried to be positive, and it's like the rest of it I would be completely made up.
Man,
these are at least
a
realistic.
month ago you were like the biggest cornball, John.
Until this report came out, and it's not so much the number that matters; it's the time of year that number came out. Because you could have 2.2 at fall and be very bullish by springtime. When they hit you with the highest number and a record high number at that, at right before plantings, where we're not going to need 96 million acres, it puts a damper on things, as far as upside goes.
So, possible government shutdown. No more.
Is that
reports.
bullish?
No more reports. Let's just go with that.
That probably will help.
Right? Demand's still good.
It's phenomenal.
Demand's still good. So weather, South American weather. That's the only to me real bull. There's inflation, but the problem with inflation is even if it brings up the corn price, all your input prices are going through the roof too.
That is
so. You can hope for inflation for the grain price, but
it's going to hit everything.
It's going to hit everything. So I would prefer not to have. I'd prefer gold and silver to level out here, start going down. But then you're going to need weather, and the problem is you're going to need bad weather in the U.S.
Really bad weather,
and we don't want that either. But that's the only really strong incentive I see right now, because I don't know how demand gets better. It's been phenomenal.
You can't.
How do we clear these pipelines?
They are as clear as they're going to get, and that's the silver lining is this could be a lot worse. We have wonderful demand that's really supporting these prices. Not only that, it's so good that we can rally until you get widespread farmer selling. So we can rally from here, but there isn't. You just keep circling back. It's weather.
I got another one.
What's that?
Everyone goes to CRP. 90% CRP.
Now you talk.
Now we're gonna have $10 corn.
Yeah, you've probably been talking with Theta Farmer. That sounds just like Theta Farmer right there.
I am stealing his idea.
Yeah, that's that. He comes up with that one every day. Realistically,
we could all go to cattle.
We could all go to cattle. This year, no. I mean, I think guys would expand to cattle if they could go to the sale barn and actually buy one for less than a mortgage payment. I think that you probably would get that, but it doesn't look like that's going to happen. So it's just being realistic about the market and having realistic levels. But I still, I was talking about the September calls. I'm still a big fan of that. I think giving up on this crop before you see any weather is really hard to do. But you also have to know there's real risk to the downside here too. We're sitting in a very terrible situation other than demand. I skipped lunch. You can hear my stomach growling. It's doesn't like to go in the threes anymore, which is good. But if we throw 96 million acres and another record yield on it, you very well could be down there.
97.1. That's my number, by the way.
And that would be terrible to see a low price with record demand and then sinking prices. That would be the worst.
Is that the first acreage call you've heard?
What's that?
97.1.
97.1. Is that yours?
Yeah.
Yeah,
I'm making it now.
Hey, you might as well. I'm going to throw mine out there too. Let's go 95.7.
All right.
Might as well. But you're in a spot where corn's going to make a decision here. I think it's going to be up and then down like last year. So I think it's actually going to give you a little shot to get a better price than this.
I think that goes back to everything that we've talked about. Is the reason to discuss any of this is you need to have a plan. Yeah. What is your plan? How are you going to execute your plan? If you think that price is going to go up, and it makes sense maybe to sit on your hands a little bit. Now, we've talked about that a lot. The do nothing that you mentioned, 95% of guys are doing, but it's not do nothing until July when it goes down again.
Yep.
Right? It's do nothing until what you think might happen.
Yeah, are you doing accumulated contracts? You don't have to do everything here, nor the elevator, or, it can be a mix of everything.
Nor should you do it all in one place.
Yeah, it should be three different things. It should be elevator and the tools they have there. It should be cash contracts, just cash marketing, and it should be futures and options mix. Or, combination of both or one or the other.
Just store it all on your farm for free.
Yeah, that's not been working. The store it and ignore it guys are going to have to change slogans. It's store it for a little while and then get a better price and get rid of it real quick. Not ignore it anymore. Before South America, you could kind of set your watch by how tight it would get going into spring, especially for soybeans. But it's just gone. It disappeared 3 years ago. So store it and ignore it doesn't work. Store it and hold it for a little while seems to. So are we at that little while, I guess is what this whole episode is. And what are other guys going to do? I think a lot of guys have marketed a little bit. I think more guys want to market more than normal. But once you do that, it's not over. Just know that you can re-own it for, let's just say we buy the 470 for 15 cents, just for argument's sake. You're thinking, I can't waste 15 cents. Why not see a little weather and let's say we downtrend 20 cents from there, that call with that amount of time, we're in May and it looks like it's going to go imperfect and we don't need this call anymore, it's still going to be worth 7 cents. You can't know exactly, but you're not actually giving up 15 cents. You might only be giving up 8 cents to have that upside.
Be only 5 cents, honestly.
And I picked 470 just as an example. Yeah. You obviously can get closer or further out of the money if you want to, but just know should you have your upside open, and that answer is going to be in the Insider's newsletter. And it will have actual recommendations, and that's for the subscribers. So that's where my answer will be. I think as a producer, you know what can happen this time of year. Lots of different things with the weather. So you can't dismiss this whole thing. You can't really dismiss this price, but you still want to look at options that keep your options open. I wouldn't just roll over on this price, but I think that a guy does really need to start planning, and within 2 weeks have a solid plan ahead of all the farmers selling, and ahead of once that sun starts to shine and you could start seeing these fields, it starts to get to be like this bad feeling, like, oh no, I have all the stuff in the bin, the market's not really going up, and now I'm going to plant a whole bunch more and I don't have a plan. What you want to do is avoid that feeling. Don't be a part of that. At least put out a plan, and there is a couple good ones I'll be putting out. Like I say, my sheets, my clients will get it, and the subscribers will get it, and then you'll kind of see it, and we'll go from there. That's my plan.
Yeah, I think we need to wrap here because I got to run to another meeting. I'm getting calls.
Man on the go.
This is a corn-heavy episode. I wish we would have hit a couple other things. We'll hit some other stuff on the Insider as well, and next week we'll go a little deeper because I did want to hit beans just a little, but I'm running out of time. Cattle, of course.
Yeah, we'll get it next week. We'll get it next week. We won't devote a whole episode, but this is really to light a fire under you for planning, even though it seems like you should be complacent and it's low price.
Yeah.
There's things that you should be planning, even if you're just having price targets in the elevator and hedge-to-arrives. That's what I'm talking about. It's not just what we were talking about.
So if you want to get on the Insider, you can sign up on the website, or you can call John at
218-731-1578.
Thanks, John.
Yeah, and you'll be seeing that sheet here very soon this week.